Throwing things in the floor. Uncool. Uncool. 19 people. Hello, people. 29 people. Good morning, Bill. Shaman. Hi. We're already liking the video? That's what I'm talking about. Jinx, hi. The coffee.
Walk, give us $1 play.
Give you a what? I'm not giving any plays today. We're gonna teach some stuff.
Man.
No plays, only teaching. Okay, so there's 43 people here. Give it another minute, see if some people are going to show up. And is everybody having a good morning? Insert learning hat.
Hey, Walk, are you adding Amazon at these levels?
I'm not even looking at Amazon. I have been trading stocks from $1 to $10 for the past, I don't know, 2.5 months now. Almost exclusively. I take that back. I traded Bank of America a couple of times. And Cisco and some weird things, but the penny stonks are where it's at. Okay, so yeah. First of all, let's go to. This is Weeble. We're gonna go over a whole bunch of shit. So first things first, my little basic setup here. This is basically almost the default setup, but I've added a couple of things. So basically, what I use while I'm trading these is mostly the level 2 data here. So I'll use the level 2 box and the order prints. This is what I think probably the single most important thing for this. I mean, you can probably do this without it, but this is basically a cheat code right here. In my most humble opinions, level 2. And we'll go over some stuff about the level 2 and all that stuff. And I use a couple of EMAs. So what I use is the 200 day, the 50 day is green, the 20 day is, the 21 is red, and the 9 day is blue, and just a standard 14 day or 14 bar VWAP. So I'm going to show you how to set up a bunch of scanners and things like that as well, and then we'll go over some setups and things like that, and which ones are worth watching, which ones aren't worth watching. So basically today we traded in the pre-market Sonoa. That one lost, which kind of sucked, and we traded this one. Got out a little too early here. I think could have probably taken like 40 extra cents on what we did take, but it's fine. We made money. Today's green. Doesn't matter. So while we're here, let's talk about this little active trader tab. If you don't have this, this only works in Webull during the pre-market. This is going to be or during the after hours. This is the one that you're going to use during the if you're trading in the pre-market hours. The active trader tab will not work. I don't know why that is, but it won't. And if you want to take extended hours trades, you have to take this off, so that way you can actually use the extended hours, and you have to manually input all of your orders. So this is pretty basic setup. I mostly use limit orders for basically everything, because especially in the pre-market anyway, I use the limit order setting for everything. You can adjust your share size here, 100, let's 500. You can even, like, it'll switch in increments. You can change all the settings. You can set up hotkeys and whatnot. So share, percentage of your account, dollar amount value. I just keep it at shares, and this will go in increments of 100. when you click this little box here. So that's pretty straightforward. The active trade tab is really what you want to use when you're trading in the during actual market hours. It's just much quicker. You don't have to type anything, and you can set this up however you want. Right now, I have mine set up for defaults are 100 shares, but if you check this little box here, you can set that to like 500 or whatever. I use this all the time. So buy 500 at market, buy 500 on the ask, which would be this side here. So if I click buy 500 on the ask right now, it would fill me at 326, 322 now. If I do sell 500 at market, it's just the market price. Everybody knows what a market order is. Sell 500 on the bid would be me hitting the bids, which is generally where you go if you want to stop out. It can get you pretty well better than a market order is selling on the bids. So like, and I'll show you how to do some cool stuff with this active trader here. Just a few minutes. We're just gonna go over the basics first. So sell 500 on the ask is would be selling on the ask side, and then buy 500 on the bid would be you joining the bid side. And you may not get filled if you join the bid. If it's like a huge order, like let's say this order at 10,000 shares at 318. If I were to join that bid at 318 and it were to run away from that very quickly, I probably wouldn't get filled. So active trader, let's go over the settings here. If you just click these three little bars on the settings, you can set up some pretty cool custom orders. You can set these up however you write and set up hotkeys for them. So my hotkey for buy market is Shift S. That's just simple market order. You can do buy bid, and then you can set offsets here, right? So like if the bid is 323 and I put an offset of 1 penny here, and I join this bid at 323, I'll fill at 323 or 324. So that'll set my limit order at 323 to 324. So it's kind of like a sweep. So if I do this for 5 cents, I could get filled all the way up to 327. And you can set this to extended hours or whatever you want to set it to. Mine is set to no right now. That actually may make it work in the pre-market if you set all your things to extended hours. I haven't really tested that, so I don't know. I'm going to have to check that out and find out. So like buy ask, this one I have set up when I buy on the ask to automatically set a stop loss order at 10% and a take profit order at 25%. So if I buy something on the ask, my stops and my take profits are automatically going to go in. So that way 10% is generally close enough where I can just drag it where I want it, and 25% is generally close enough where I can just drag that where I want it as well. So in order to set that up, you just check these little boxes. So stop price, and then you punch in whatever you want, 10%, 25%. And that hotkey, you can set up your hotkey here just by clicking on it and clicking whichever key you want. If I want to change it to, let's say, Shift V, see, it would change to Shift V just by hitting that. So then we have buy customize here. This is where you can set up whatever order you want. So let's just say like I want a limit order for 100 shares on at the last price, and I want it to fill no more than 2 pennies higher. Time in force is day, extended hours. Let's say I want a stop loss and a take profit on that, and it would be, let's just say, stop price of 5% and take profit of 15%, right? So that's pretty straightforward, and this is going to be like, it makes your order execution times a lot faster, and if you're not using this, you really should, especially with these fast-moving momentum stocks. You need to be able to get in and out very quickly because price action is a lot of times pretty erratic. Like even on a 1-minute chart, this one candle goes from 334 all the way to 310. That's like pretty huge when you're trading 500,000 shares of something, and you drop out 30 cents in one candle. So it is important to be able to enter and exit quickly. So everybody understand how the active trader works? Questions about the active trader? Anybody? Nobody? Okay, well, let's get into the bigger juicy bits here. So let's go to a customized tab. I'm going to show you how to make this, which is a pretty cool little Weeble tool that I've made that I look at. I look at this in the pre-market, right? So right out of the gate, I'm going to show you how to make this. I've done another video on how to make this before, but let's do another one now, right? So this is pretty. So you just click on new layout. Let's go to a blank layout. And what we want is 4 charts. And we'll just put all those guys nice and neat right here. You can set this up however you want. The information will be the same, but I like it like this. So we've got 4 charts. You want to make sure you click extended hours for all 4 of those. I set all of them to 5 minutes. Let's get rid of the moving average. And what we'll do to make this a little more uniform between what we're actually looking at is we'll add some EMAs to this. So click on Edit Indicators, EMAs. And I don't like to add the 200 to my smaller charts. I add the 9, the 21, and the 50 only to my smaller charts. So the 9 is always blue for me, the red, 21 is red, and the 50 is always green. I think it's a little bit too much to add all kinds of weird stuff, and then the VWAP I always make that one white. So you get to adding like 100,000 indicators to your charts. It just looks weird and it's like too much in my opinion. So there's that, and we'll do that for all 3 charts. We'll add all those indicators, the 9, 21, the 50. The 50. And VWAP, we'll make it white. And if you're trading in the pre-market, like this is really one of the only like scanny kind of tools I think that you actually need really. This, if something's moving, this pretty much covers, and I'll show you momentarily all the cool shit that you actually end up with when you're looking at this. This is probably my favorite little dude I've ever made on Webull, if we're being honest. I use this every single day. Like it stays on my other side screen all the time. Okay. Almost done with this. So 9, oops, wrong red. 21, 50. Okay. So, and we got all that. We got extended hours checked. They're all set to 5 minutes. Got all of our averages. Now, what we want to do is this bottom right-hand chart. We're going to link that to group 1, right? And I'll show you why momentarily. So cool, we got our 4 charts. Now, we want to add, let me find it. Analysis, trade, general market. So we want, where is it? Where is it? Where is it? Where is it? Where is the top gainers at here? We don't want to trade on this. It's here somewhere. Index, top options, global heat map, top gainers and losers. There it is. Let's add that. We'll just put that dude right here. Top gainers and losers. Put that right there, and we'll make it about yay big. Now we add advancers and decliners. Drag that up there so that you can see everything that's advancing and declining to kind of get a whole little big picture of the market. So we got top gainers, top losers, and then we've got most active. Let's put that up there also. This will show you all the most active tickers. This is being recorded. Yes. And then we've got most popular stocks. Let's put those up there. And that's pretty much going to be it for that there. Now what we want is a news box. Options, statistics. As soon as I find it, I haven't done this in a while. Orders, positions, price letter, banking. Looking for news. There it is, news. We'll put the news there. What we're also going to do is we're going to link that news box also to 1. Yes, and then we'll link this up here also to 1. And now what we have is when we click on one of these, it's going to go up right there into that chart. All the news for it's going to show up right here. Right? So now here we go. And right here in this top corner during the pre-market, you want to make sure that switches to pre-market. So now we can see volume, market cap. Hello? Can you hear me now? Hello? Oh, okay. Should be back, right? Sorry about that. I don't know what just happened, but that sucks. So what I was just talking about is basically I'm hiding all of the values on these charts to make them cleaner, right? So if you click this little hide indicator values and then on the open little hide close, you click the little eyeball, that'll hide all that stuff and make your charts cleaner. And now, so like since I just randomly scrolled over this BNFT, whatever it is, let's talk about buyouts, right? So buyouts generally about 90% of the time are not going to be something that you want to trade. Like you see this and you look at it and you're like, holy crap, that's cool. That's a huge spike up, right? That's awesome. It went from 690 all the way to 11. People are going to want to trade here. But what you're not thinking about is that the buyout prices for these are going to be already set, right? So like X company buys this company for $10.50 per share. And then you see what it does for the rest of this market. It's done nothing. It's stuck right around like 10.50 a share the entire market, and there's not going to be any opportunities here whatsoever to trade this. So the only time that buyouts are like acceptable to mess around with is like rumors of buyouts before they actually happen. So once another company acquires a company, it's pretty much done, and you might as well just X that one off and not even bother with watching it, because it's going to trade sideways all day long and do nothing. So that's really all I can say about the buyouts. But then yesterday, right? Was it yesterday, day before yesterday, we found a company that was rumored to buy out, and the notes got released before the actual buyout when the stock was still under the buyout price, right? I think it was at like, it was AGH something or whatever, and the price was still like $1 under the actual buyout price, and that was a pretty good trade because we got in super early before the huge thing took off because it was going to be bought out, right? So that's when it's acceptable to trade buyouts. So pre-market, what we want to look at. So volume, super important, right? You get these stocks that'll move up 30, 40, 50%, and the volume's only like 10K, so like 20K, right? Here's a one that's 20K. You see it bounced in pre-market to 97 cents on 20,000 volume. Immediate red flag. That's like 2 or 3 orders, somebody's being stupid, and those are not stocks you want to look at. But this guy, like 1 million volume, and 4 million, 10 million, 3 million. I'd say anything over like 250, 300,000 could start getting interest, but like 500 to a million is better in the pre-market, right? Depending on the float and the catalyst, right? So what we want to do is find these things with volume, right? So like Frieza here, or FRZA, whatever. It had really good volume in the pre-market. It shot from like 100,000 volume to 300,000 volume like instantaneously, like right here. And then we had this nice like huge dip here, and then volume spikes again. And so we see we have a catalyst here. X1 receives 50 electric boat reservations in the last 90 days, potentially resulting in revenues of $8 million. So that's pretty cool. That's a good catalyst. So now we can go into our chart here and look at this on a bigger chart. And what we want to look at is on this quotes tab here. You click on more and you can see the float. See, the free float market cap is 8 million, and then the free float is 3.4 million. If you find one of these that has like a 50, 60, 70 million float, or even like I saw one earlier that had like an 80 billion float, it's not going to move. And the reason that the reason is that is there's too many available shares to make any significant kind of runs, right? This guy with 3.45 million free float, and it's trading at a volume of like, what's the volume today? 32 million, right? So that's 10 times the available shares. So what that means is that every single available share on the market of this company has changed hands 10 times today. And that makes for some really interesting price movements. That's really kind of what you're looking for in these. You want to check the catalyst, make sure the catalyst is actually something like that's legitimate. It's not just like no news at all, because if it's no news, it's probably somebody kind of like fake pumping, fake dumping. And if it's an actual physical catalyst, the interest might be real. So we see we have good volume, we have a catalyst, and now we're looking for an actual place to be involved. And for me on this ticker, it was this dip down to this whole dollar support, like at $2 right here. And in the pre-market, see huge volume spikes here, just under $2. You get that good bullish pin bar kind of like volume spike, and we'll go over a lot of that stuff later in a bit, some standard setups and things that I'm looking for. But basically, Webull, this is this customized tab. If you're trading the pre-market, this is really all you need. But we're going to go over how to find like some second day plays and things that may run multiple days using like FinViz, and then we'll go over some Thinkorswim stuff. Thinkorswim is scanners that I use for that you can set up for free. to find like intraday movers that like it just happen to pop up out of the blue on news and things like that. um, Anybody have any questions on setting this dude up or things like that? We all understand how to set this guy up. People, you guys are being awfully quiet in here. Anybody? Nobody? Nothing? I know I'm not that good at teaching stuff. Okay. So, let's go back to regular charts and look at setups, right? No, 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 no. Markets. Oops, wrong thing. Stocks. Regular chart, 1 minute. We'll go over some setups for 1 minute and a 5 minute. So we're already here, so let's just use this one. So there's a couple of setups that we can look for, and the main setup, like that I find works absolutely best on almost all of these, is the bull flag, right? So this is not a very good example of a flag. Let me find something. Okay, so let's look at this, right? This guy moved yesterday. Here we go. Bull flag. This would be a perfect example of a bull flag. So this is a 1 minute chart. It's going to look pretty much similar on a 5 minute chart as well. But generally, I use 1 minutes for when things actually start moving, and then I'm watching a 5 minute chart to find out, sort of kind of like keep things more concise and clear when I'm actually just watching. But when I'm actually trading, I'm using a 1 minute chart on these. So bull flag. This is a very simple to understand setup. This is where our averages and our VWAP and stuff are going to come in. So we see we're already made a nice move up, and now we are consolidating. And bull flags come in two kind of places, right? So this one kind of chills sideways. This is a flat top flag, really. So it chills sideways, sort of like right in this range here. So there's two ways to get involved in this, and one of them, and probably the safer way here, would be to just buy on the volume spike over the highs, right? So like right here, if you see this volume spike, when it actually breaks out, and it does break out, you see this huge volume spike, it pops over these highs. The entry for this is going to be that candle there. So let me get another little dude here. So the entry for this is going to look like this. So you jump in right around there, and that's where your active trader tab is definitely going to come in handy, right? So the risk for that trade is this, and then, so what is that, like 255 to 245? That's like a 10-cent risk here, and it ends up running up to $3 even. So 10 cents for 45 cents. That's like a 4.5 to 1 trade. So, but you essentially, you're not going to get this whole $3. It's just probably not going to happen at all, right? That's why I always kind of scale out of these. So when I actually trade these, when I get to like 1 times my risk, so like 10 cents, if I'm up at 10 cents, so like 1 times my risk, maybe I'll sell half, maybe I'll sell 25% here. And then let's say it runs 2 times my risk, maybe I'll sell another 25% there, and then maybe it hits this $3 level, maybe I'll sell another 25% there. So now I've just got nothing but runners left, and then it starts to turn back around, and it makes this kind of like new 1 minute low here, but it continues kind of holding this average. I'll leave those runners to run until like here when this average breaks. So sometimes you can get like huge runs, sometimes it doesn't give you pretty well anything. So the last exit around here would be about 273 for this guy. So that is pretty well standard flag. The other kind of thing that you can use to enhance these flags is if you're looking at the level 2 here, so like assume that we're watching this and we're watching this and it's consolidating, it's already on our watch list, and then we get this volume spike and we see, let's just say there's a big bid on the tape like this guy here at 8,000 shares at 198. If that were a bid here we could step in front of, so like we get in at 199, maybe $2, and now we've got a much tighter stop because we have this guy that's kind of football blocking for our order, right? So we have 198, we're in at $2, and we've got two kind of bids here together, 198, 197. So let's just say we put our stops at 196. So we have a 4 cent stop for a potential 50, 45, 50%, 50-cent reward here. You can lose like 10, 15 trades in a row and win one and make up all of your losses and then some if you trade like that. So that's kind of the best part about this, is that you can have really, really small stops. And if you're not using level 2, you see you had a 10-cent stop. If you are using level 2, you have like a 5-cent stop here. So you have half the risk if you're using level 2 data when you're looking at this stuff. And I have a whole video deal on level 2 data and sort of how you can get into like starting to learn and read that on the channel. You'll have to go look at that. But basically the main thing, once you get the basics of what bids and offers are, what a held bid looks like, what a held offer looks like, and what the prints are actually telling you, the only way you're going to get better at that is just by kind of watching them. You have to watch the tape. So you might as well use the same ticker. Here's the other kind of bull flag. So you see you get this little interest pop here. And then these small candles, and you kind of consolidate sideways and down. And you land at this 20-day average here. And then from there, volume is sort of kind of like tapering off, tapering off, tapering off, and then you get this huge spike. That's the other kind of bull flag. It's sort of like a pennant almost, really. That's an actual trading pattern, would be a pennant. But the entry for that is pretty much exactly the same. Entries, stops, and then the same. You kind of scale out along the way. 1 times, 2 times, and then 3 times, leave runners. And then now in this scenario you've got this consolidation, so below that you put your stop. Sometimes maybe it'll break out and go higher, but this case it didn't. It actually just got crapped. So when you get down to just runners, it is my you should actually have a physical stop in that you can move around, right? So like put a stop right under that, because that'll save you from this happening and giving up a quarter of the gains and that you've just made, or maybe even all of them, really, because that's a huge, huge drop from 284 all the way down to 250. That's like a 40-cent drop in 1 minute. So if you don't have that stop in, it's very, very unfeasible that you're actually going to be able to get out here in any kind of like actual, before you give everything that you just made back, right? So have that, once you get down to runners or even just half size position, have a stop in, like a physical stop that you can move around. Or, just keep a physical stop in all the time, right? And when you need to sell something, exit it real quick, click sell, put your stop back in. Which, am I playing the PAL meeting on SPY today? I'm not playing anything else today. I'm just hanging out with you guys. I'm pretty much done for the day. So that's pretty much going to go over bull flags, and we'll use the same ticker here because this guy had like a bunch of setups on it. Bull flags, you're looking for, I use these averages as sort of like reference points, really. So most of the time when you flag, you're going to flag into one of these 4 or 5 averages, or even the VWAP. And then the other setup here is a consolidation breakout. So this one's pretty standard as well. So 2 ways to get involved in this. You could just buy when you find the support. So like here, support, support. If you buy here at 255, it's going to fail a lot more, but when it does fail, like your stops for this are, once again, like 2 or 3 cents. Or if you want a less stressful, kind of like not wait forever trade, you just actually buy the breakout. And same story, scale out along the way. So that's a very, very straightforward setup. And then finally, let me see if I can find something. The other setup that you really want to look for are held bids on the tape. So assume, let me find something here. Okay, here's one right there. So right now, this guy at 246. You see this dude here at 241 with 20,286 shares? If you could get in here at 242, 243, right? You can have a stop loss at 239. So like a 3-4 cent stop, because this guy at 20,000 shares is basically the football blocker I'm talking about, right? You could even get out before them because this order is so big that it would take these offers, people selling into that order, at least, a minute or two to fill that guy's order. So if you can jump in here at 242, 243, and you see that you're also breaking out from this sort of like little mini consolidation you got here, this is my favorite kind of setup for these. Right here, 244. Watch this guy. So he's got a huge, huge bid here at 244, and it went from 20,000 to 18,000. Look at all these orders that are hitting this guy. So you're watching this, and you jump in there at 244, and now you've got some bids coming in here at 245 above this guy. 19,000 shares. People are also joining that bid. So the risk at this point, if you get in at 245, is 2 pennies, right? So if you buy 100 shares, let's say you buy 100 shares at 245, right? And you can see this guy's order right here, still 19,000 shares. If this order drops, you get out immediately. If this order holds, you've got somebody blocking you from being stopped out here, 19,000 shares. If that makes sense. 20,000 at 244. So this is a good low risk entry here at 244, 245 for this ticker. But what you really want to see is orders start to step in front of this guy on this breakout. Right, so 244, you want to see some people start coming in at 245 and some people coming in at 246. And you see all these orders here at that are green. All those are orders that are filling on the offer, right? So people are buying the ask. And that is my favorite kind of setup for these, right? So you've got football blockers here basically that are protecting your stop loss. And your stop loss is like 2 or 3 pennies anyway, because you've got this big order that you can use to trade. And if you see this big order go from like 20,000 to 15,000 to 10,000 to 8,000, you can go ahead and just jump out at 244 and you've lost like 1 penny in the whole trade. So this guy's went from 20,000 to 14,000. Still holding at 14,000. At like 4 or 5,000, I'm going to start getting a little worried here. Boom, he's gone. Sell your position, 244. You're done. You lose 1 penny. No big deal. But a lot of the time, those orders will actually hold and it'll blast off from there because all the other people can see that huge order on the tape as well. Does that make sense? It's my favorite low float setup is buying in front of somebody else's giant, huge order. But like in this scenario, that order dropped and it didn't actually just like tank from that order, but you had ample opportunity to get out with a 1 or 2 cent loss before it crapped itself. Worst case scenario, you can just buy your shares back if that guy shows back up. Makes sense. But from a strictly price action standpoint here, this thing is not really, I mean, this part of the day, it's not really doing much in terms of interest. The volume's still really high. Most of these better moves will happen towards the beginning of the day and the end of the day. Everybody get that? Everybody? Yes. understand sort of kind of like that jumping in front of somebody else's big order, hopefully. I'm waiting for. Come on, you guys, ask me some questions. This is going too fast. No, yes, maybe. Okay, that's cool. Let's look at FinViz now. Show you some cool FinViz scanners. Let me log in. I don't remember. What? Why? I'm trying to log into FinViz, and for some reason, it is not working. Ah, there we go. Okay, so this is FinViz. So FinViz is pretty cool. Nice, free tool. How do you work swing trades for low floats? I will show you momentarily, right? So SoFi is not really a low float ticker. Let's talk about that in a second. So SoFi is not a low float ticker, and let me show you why. SoFi is more of a mid cap stock. So like you see SoFi here. It had a nice run. Sure, that's cool. You can trade these the same way, but understand that this is not a low float ticker. This is just a low cost ticker, right? So you see the float here for SoFi, the free float. You see the difference? This is a 778 million free float and 4.14 billion free float of market cap, right? So this is a huge, huge company. There's 922 million shares outstanding for this company. So, and the market cap is 4.89 billion. So this is more like a mid, almost a large cap stock, but that just had some good news. And that's fine. It's still worth watching things like this, but they're not going to move like a low float will, right? It's not going to just explode. But the setups and everything are still the same. This is still a bull flag in the pre-market yesterday. That's still a bull flag. This is still a breakout. And yeah. Wow, SoFi took a crap. The setups are the same, right? And you can still use catalysts on things like that, but they're not going to like explode like some of these other, like GoVX did, right? Let's see. It's not going to explode like this from $1.10 to $1.85 because this floats 24 million as opposed to like 900 million, almost a billion, right? So 24, like 20 million, that's still a pretty good number on a float, but you need more volume to make better moves. Does that make sense? Or let me think of another one. UBX took off yesterday. UBX went from 280 to 380 in less than an hour. And the reason for that is that the float is only 13 million. Shares outstanding 14 million, floats 13 million. See, the difference in that is the number of outstanding shares and the number of shares available to trade. When every share available changes hands multiple times in a day, it's going to cause more volatile and erratic price action. And while we're already here looking, so for like swing trades, like this was a multi-day runner, No, it wasn't. Like, okay, so here's one, a good one. And you see what always precedes these on a chart is volume. So, boom, one day, breaks over these highs. So let's say you got in this day at like $7 here, right? And it ran to 880. Maybe sell half of it and hold some more because volume's good. Next day, volume's really good. Runs to 1060.
A new follower.
Hey, thank you for the follow. So basically the way to trade these for multi-days is definitely with volume, and none of these moving averages or VWAP or anything are going to help you in this situation. It's all volume and catalyst, right? So you see, catalyst for this was probably earnings. So you get 2 days of good solid running for this. Probably some hyped up earnings news event. I don't know what the actual thing was, but you know, when it starts doing this sideways things here, you probably want to go ahead and jump out. So that was another one that did it. I know GoVX was a multi-day runner. So here's one. Huge breakout. The second day on this one, it trades all the way down and then closes at its high. Maybe at 16. Maybe you jump in here at the end of the day toward like 16 based off of an hour chart, and you want to hold that overnight. But understand that holding these overnight is going to be much, much riskier. And this has a history sort of running as well. So like here's kind of, let me find out where that first huge giant, where was the huge monkey? Like this was the monkeypox move, really. It ran for like, and it's done some share offerings and things like that. It went from like a stupid low all the way to like a ridiculous number in a couple of days. Because, see, there's one from 5 to 17. That's probably it. So huge breakout, runs all the way from 9 to 35, right? It was some monkeypox things and everybody was freaking out. Here it is again from 270 up to 750 in 3 days. But what precedes that huge move is always going to be a breakout over some consolidation on a stronger than normal volume. See, and you get that here, this huge pop there, then it sort of almost kind of like flags down in a daily pattern, right? And then you get another huge volume spike over the highs. So the entry would be somewhere in this day for this, and then exits on this day, right? Same thing. You see it's kind of consolidating, but then you get these couple of green days near the lows where you get some good volume, but necessarily probably wouldn't hold those through this whole like 20-day sideways crazy action here. What's up, Brian? Or Brian, sorry. Same thing, sort of in this area. Huge volume on an update, flags down, huge volume, big volume, big volume. So you get this whole sort of consolidation phase where the green days have much higher volume and it's not going any lower than this price here, like this price level. So you kind of enter around there in this consolidation. And it's hard to catch these multi-day runners, but when you do catch one, it's like 370, 750, and they don't come around every day. Like, there we go. Here's one from 54 cents to $3.30, right? And then it goes all the way back down to where it started, right? And then you get a huge volume spike here again, and then it starts to huge volume the second day. So you have like a couple of opportunities to get in here around like $1.50, $1.30 with stops at like say 98 cents. So you want a smaller size on the swings if you're intending to swing these, right? So that way you can have a wider stop. So if I was to get in here, let's just say on this second day at, let's just say I got in at $1.60, right? My stop would need to be at like probably under $1, like under the $1.50 there, right? So, or even under like $1. So I would have to have a smaller size in order to account for that added risk. So let's say, boom, this is my entry and exit. Oops, shit. My entry's there. So I'd have to have a smaller risk, and I would also need to manage my profits a little differently. So at 1 times risk, I definitely want to sell half and then move stops to even. So then I have 0 risk in the trade, and then I can just do whatever I want from that point. Yep, yep. So now that's going to kind of lead us into like FinViz, the FinViz stuff as well. I'll put all my crap back to normal. Okay, so that'll sort of lead us into the FinViz stuff. So this is going to be a really good tool for finding those second day plays and the multi-day runners, right? So if you click on Screener here, first thing, we're going to sort this by volume. So we're on the FinViz homepage, click on Screener, volume, maximum volume, boom, sort that by volume. Okay, now we want to change this to charts. We want the daily time frame and get rid of this. See where it says technical here? That's horse shit. Get rid of that. Click on candle. Boom. Now we have some charts. So what we want in this scenario is from the descriptive tab. We want price. Let's do $1 to $10. Click on $1 to $10. Right. So and then relative volume over, let's say, let's start with over 1.5. Boom. That's pretty much gives you 11 pages. And now what we want to do is go to market cap here. Let's do well, you don't need to do that, but right now 11 pages of things to look at. If you need to sort this down, you can even change the relative volume to like over 2. So now we have 8 pages of things, and look what's on the top. Sanoa, 2-day runner. This one's relative volume showing up. And what you're looking for here is these breakouts over these consolidations, and then you can do a little deeper research and figure out kind of what's happening. Like ARAF here ran for 1, 2, 3, 4, 5, 6, 7 days, and it all started from this breakout over these highs at 91 cents. So let's actually go look at that. So now you find this, and you scroll right down here, and you see average volume's 456,000, relative volume's 16. That's stupid. Then you can look at the float, 17 million, so that's good. You could look at the short interest here. Right now it's only 1%, so that's not going to give you any sort of like added, move up. You can see insider ownership's 41%, so that's pretty cool. So that means that the people who actually run this company own 41% of it, so that's not bad, right? So that's good. There's a lot of good information here on this, and if you scroll down a little farther, you can even see somebody initiated this on June 3rd at a buy at $15, so that's a long time ago. But then you can see all the recent news. So like here's October 25th. AirVive announces approximately 41.5 million private placement financing, and that's probably the catalyst that started this whole thing. So now you have this on its 1 day. You could watch it, see if it continues higher, and swing trade based off of that. So this scanner is super, super simple on FinViz, right? It's literally just price filter and relative volume filter. And you can change it to small cap as well, like 300 million to 2 billion, or micro cap 15 million to 300 million, or nano cap under 50 million. And that'll give you different results based on sizes of companies as well. And what you can also do, so like stocks 1 to 10, let's do relative volume over 1, and let's do short interest, like short float, right? So let's do anything over 10%. So now we have all of these low floats, or all of these low-cost stocks that have a short float over 10%. So there's 2 pages of that. We could find things that are possible short squeezes in order to swing trade based off of that, or create watch lists. Like say we create a short watch list, right, for things that are short. So like Metamaterials here a couple days ago has been just blasting off, right? So here 80 cents all the way to $1.30. That would have been a good multi-day trade there. But you can see the short for that was 11%. So probably not quite enough. Let's try anything over 20%. Okay, so there's 4 stocks of things with over 20%, and they're starting to show some relative volume, right? So this could short squeeze. PPSI could short squeeze if enough volume comes in that it scares those guys out of their positions into covering, and that could add to a move up. So short squeezes, they don't come around very often, but if you have a kind of like a running list of things that have high short interest and are in your price range, you can find tickers that have the possibility of breaking out. So like this one, if you were going to get into it, probably would have got in here around 289, 290, right? And you're looking for the shorts to cover and trade it the same way you would like a regular momentum at that point. I'm talking a lot. So there's that. Finviz scanners. Showed you 2 really simple, really cool ones. First one, relative volume, simple. Play with that number, change your price range. Boom, you get a list of stocks that have, in your price range, that have really high relative volume. And from there, you just sort through things. That'll give you good swings, good second day plays to watch. Like Sanoa, first day, this would have showed up yesterday, and then it did run again today. So it went 245 all the way to 319 today. That's good. This one may run into tomorrow. You keep it on a watch list for tomorrow. Metamaterials would have showed up here definitely on this day. Definitely on that day. So, pretty cool. This one would have showed up first day of the breakout, and it ran for several days after. What's up? Oh, so, and then we've got the short float scanner. You can play with those numbers there as well. That's pretty much all that you need to mess with on Finviz at this point. See if I have any other scanners. Current volume. You can play with that number as well. So, pretty much it for Finviz. Now, this is Thinkorswim. Don't freak out. I'm not going to show you how. I'm not going to show you how to make this, but this is what I watch during the intraday, and I'll show you how to make all of these scanners. They're super simple. Brian, are you still here? This is what you've been asking for days. So, same thing. All of these charts are linked. I've got a 5 minute, 1 minute, 5 minute, 2 minute. All these are going to do is find relative volume. So first thing, if you want to set this up for yourself where you got your own little watch list and everything that's linked, I'm not going to go through how to set up an entire Finviz thing or an entire Thinkorswim platform, right? But what I will show you is once you get your watch list tab and you add all these watch lists to it, this relative volume is not going to be here. On Thinkorswim, relative volume is called relative volume standard deviation. So click on this settings tab on your watch list, go to customize, and then find this relative volume standard deviation, right? Boom, it's right there. So you see that? You would add that to this list so you can sort by this, and then you can change this from aggregation. So like this is my 5 minute list. So I want to change this aggregation from 15 to 5 here on I don't even know which one I clicked on. Which one did I click on? And then leave everything as default. So it plot relative volume, it would plot that on a 5-minute chart, and then boom. Okay. Oh, no, that was my 15-minute chart, wasn't it? So, okay, let's put it back to where it was. So this is my 15-minute customize relative volume aggregation, 5-minute. This is my 15-minute scanner, right? So that's important. So that'll sort the relative volume in these lists. See, this one is in my 5-minute scanner, so it's set to a 5-minute length. So this shows me all of the relative volume. So like, boom, 5-minute candle. Straight out of the gate, it's sorted highest first. This looks like shit, not worth trading. It's just one random fill order there. This one, not worth crap. This one, not worth a crap. This one, maybe something here at, but it is, right? So, boom, 2 good spikes. And I also have this dual volume bars indicator that I will show you guys real quick. It's pretty simple to make. But this is the daily relative volume scanner for high dailies. This one's for 1 hour. This one is for 30 minutes. This one's for 15 minutes, and this one's for 5 minutes. And that's all I watch all day. And I will show you to make those. But before we do that, so this is a custom indicator. It's called dual volume bars. I made it myself, and I will show it to you. Let me see. Studies. Edit studies. Dual volume bars. Actually, how do I... I can't remember. Create. There we go. Where is edit? Type in dual volume bars, right click and edit. So now you can see I'm going to actually just, it's pretty simple, but I will. So I'm just going to leave this sit here for 1 second. So if you want to create this indicator yourself, you can just copy this exactly as is. So what this does is it'll color your bars 2 colors instead of just 1. So like you can see selling and buying pressure as it happens. So what it does is it colors any red tick red and any uptick it'll color green. So you can see like this candle, it adds sort of like that this is a more bearish effect to this because 90% of the candle was people selling, if that makes sense. So code for that. This is all recorded, and like I said, you can come back and pause this and create this yourself. So this is the entire code. It's called dual volume bars. It's a custom indicator, and it is super super easy to make. Super cool little indicator. I love it. All right, so there's that. What's going on in the chat here, my friend? That's not what we're doing right now. We're not giving plays. We're teaching. Anyway, so there's that. Now let's go into up here at the top. You see scan. Boom. So what I'm going to do, straight out of the gate, I'm going to load my low float. So this one is for the daily. So this is a very, very simple scanner as well. So first thing here up at the top, you want to make sure that scan is category all stocks. Intersect with none, exclude none. And I'll show you how to convert this into a scanner that'll actually work with only weekly options as well while we're here, right? So once you know how to make one, you'll know how to make them all. So what you want to do from this point is in all of the following, you want to add a filter, stock, and then you'll click this little drop down box, click volume. So we want a minimum of 250,000 volume, and then just put this, drag that little box there all the way to the max. Okay, that's very simple. Then we'll add another filter, stock, drop down box, click last, and then we'll do our little price filter here. So let's, from 50 cents to $10 is what I have it set at. You can set it at $1 to $10. You can set it at 25 cents to $10. You can set it at $5 to $500 if you want to. It's all personal preference. This is the meat and potatoes of this scanner right here, right? So you click on add a filter, add a study, and then you go custom. So right now we have ADX, go to Think Script Editor, right? So you can use, probably, I don't know if you can use a condition wizard for this or not. Let's find out. So what we're looking for is study. Look up a study. We'll type in standard relative volume standard deviation right there is what we're looking for. Boop. And then we'll do is greater than value 1.5 within 1 bars. Save. That's as simple as it gets, really. And then we can click OK. That's different than mine, but that should work. Let me just actually show you mine. So this is what I'm using currently. Plots, there we go. So this is, I actually coded this myself. Plot signal, super easy. Relative volume standard deviation. I've got it linked to the 50-day. That's what's different here. So this is just relative volume for the last 50 days is over 1.5, right? So that is the one I use. Leave that up for a second. And that is pretty much the scanners that I use every day, right? So, and now in order to change this from the daily to a 1 hour, you just click this. So what you want to do first, of course, is click this little dude here, save scan query, save it to whatever name you want, relative volume 1 day. And then you change this little daily to a 1 hour. And now click the extended box. Save that one as well. Save that one, standard deviation 1 hour, and then do 30 minute. Save that one. 15 minutes. Save that one. 5 minutes. Save that one. And that's pretty much all there is to that, right? So if I put this back on daily and I just click the scan button to make sure it works, boom, that's everything that's trading with very high relative volume today. So, and you can sort this list as well. Once you save that scanner, you'll be able to go over here to a chart, right, and click on this watch list part, and you can load that list. So like, if I load this list into here, it's going to keep that like a rolling updated watch list all day long. So anytime that changes, this list will change. So like you see the different stuff on the 5 minute chart on the 5 minute one than it was now. Like, that's probably because this guy ran a little bit. That guy's been on the 5 minute chart for 3 minutes, boom. So that'll find things like this that you can be watching for plays. So something happened, don't know what happened. This guy started running. In you, that would have showed up on this chart here. So that's, those scanners are super simple to make. There, let's not argue in the chat about weird things. The server does have alerts, actually, and all the time. I'm so confused right now. Anyway, anybody have questions about the scanners? That's pretty much all there is to know about, well, not all there is to know, but that's pretty much the whole crash course that we've got going on here. Holy cow. So now, while we are sitting here, James, you can DM me on Discord if you want. And everybody else, whoever needs to do that. So that's pretty much all there is to this. If there is no more questions, I guess we're done. So that's about that. I appreciate you dudes hanging out. And 3 or 4 more minutes. Anybody? Questions? Random questions that have nothing to do with this even? James, like I said, DM me in Discord and I'll get you hooked up if that's what you want to do. I don't have access to any of that stuff. Fromkin does all of that, so but I can help you. What's the Powerball numbers for tonight? 7. 8. Little Rascals reference? Come on. Anybody? What's your bank account number? 7? We'd like to buy some lumber. No, nobody. Come on. I watched that movie like a whole bunch of times when I was a kid. And Abdullah, you know that Brian doesn't. He's not like he doesn't work for get money, and he is not required to. Nobody's gonna be required to tell you what to buy, when to sell it, because ultimately, whether you're taking in somebody else's trades or not, nobody's responsible for that except you. So like, trade alerts are all well and good. They're great. I love them. I think they're a good tool, but you should at least educate yourself on the person you're following specific style, if that sort of like resonates with you, so you can see sort of manage it yourself, right? So like if I'm trading bull flags and stuff, you need to understand what a bull flag is and where the stop should go and where the targets should go. So that way when I say, okay, I'm getting in this trade here, you can look at this chart and say, oh, okay, that's a bull flag. I'm going to go ahead and set my stops here at like 190. He got in at 2. I'm going to set my stops here at 192 now. And then you could say, well, maybe I'm not going to wait on him to exit because I already know that I want to exit here at this resistance. You already know kind of what's going on before, anything happens. Like, trade alerts are all well and good. They can give you great ideas, but you need to at least know how to manage your own trades. Like, because let's say I take this trade and let's just say just right off the gate, my account is $10,000. So I take 600 shares. Your account's only like, let's say $2,000. Maybe you only want to take 75 shares or 100 shares, because you need to understand how to manage that. And you're not ever going to make any money whatsoever at all in any kind of trading at all until you learn to manage your money properly, right? You need to learn how to size properly. You need to learn how to where your stops should go and what you are willing to risk in order to take those trades. So like if I know my account's $1,000 and I want to risk, let's say, $20 on this, and I know my stop's 20 cents, I know I can only get 100 shares. Now if I want to risk $20 and my stop is only 10 cents, okay, now I can get 200 shares. Maybe my stop's only 5 cents and I want to risk $20 on my whole account, so now I can get, like, what's 5 then, 400 shares. I don't know why you can't DM me. My DMs are open. It's VUALK number 1337. Send me a DM. But okay, I'm gonna end this stream now. Like I said, James, DM me or tag me in the channel or something. Like go to the live voice chat room and tag me, and I'll send you a DM. Everybody else, it's been super fun. I had a great time, and you guys are all awesome. We'll see you all tomorrow.